Hello, everybody. Happy Easter. I'd just like to check in for a third installment of my investment videos related to monthly dividend stocks traded on the TSX. So last month, I was very concerned about the war in Ukraine and how it might end up, what it might mean for the rest of the world. And I don't just mean consequences for financial markets. It turns out the war became way worse than I initially thought it might be. However, 1 month in, it seems to be contained relatively for now. It's still an ongoing humanitarian disaster. But the question is, can we still safely invest as Canadians, even though terrible things keep happening in Eastern Europe? I believe so. None of the top Canadian monthly dividend payers have pulled back at all, really, and none that I am aware of have cut payouts or given any indication of doing so. As for me, I'll just keep plugging away. I can't help what's happening over in Eastern Europe. I can just hope everything calms down and the fighting stops sooner rather than later. This month, I just held, which is okay. I collected dividends, and that's what a dividend account is for. Not every month can there be a dip trade. So in my portfolio, I currently have 6 different monthly dividend payers, and only one is in the green with respect to its current market value being above its book value. And this one is called Diversified Royalty Corporation. Its stock symbol is DIV. And it is one that I haven't mentioned before. So I'm up by plus 8.77% in it. However, I don't have very many shares. So I feel that my profit is not enough total money to bother trading it in at the moment. This month, my big play is to use my dividend payouts to buy more shares of DIV. And here is why I recommend Diversified Royalty Corporation for a play this month. To begin with, it's dirt cheap to buy. At the time of making this video, it's trading at just $3.09 per share, and it pays out 0.022 cents per share every month. But if you do the math, that works out to be about 8.5% a year total distribution. And right now I only have 225 shares, but I get over $4 for holding that small amount on the last day of every single month. So you can see how pennies really add up to dollars in this case. Not a lot for me yet, but it's still money. Diversified Royalty owns interests in Mr. Lube, Air Miles, Sutton Realtors, Nurse Next Door Personal Support Workers, and Mr. Mike's Steakhouses and Oxford Learning Centers, in case you're wondering. And I'll disappear for a second and show you the website so you know it's legit. And you know where to go if you want to do your own research. You'll notice it's a West Coast operation, so it's not local to me at all. I have an Air Miles card, though barely use it. I don't really care about it, but I know a lot of people enjoy collecting their Air Miles. Oxford Learning, don't care about them either. Mr. Mike's, never eaten there, never even heard of it. None are located near me. I looked at their online menu and I don't know, it seems expensive. The other 3 components I like a lot better. Real estate is hot right now. Home care for people is never going away, and neither is the quick auto service industry. But you know me, I'm just here for the dividends. I did look at their financial reports on their website. The highlight for me was the bottom line, and they made $10.9 million in the last 4 months. The only section of the corporation that didn't grow was Air Miles, actually, and their steakhouses seem to rebound nicely coming out of the COVID crisis. The vast majority of their money comes from Mr. Lube, but I like the long-term potential of the Nurse Next Door component. It shows a 2% growth every year, according to their numbers. So my personal experience with DIV is as follows. Many, many years ago, I owned it. This was like 2015. I held it for a number of years too. It was a lot different back then. I remember I had a lot more holdings in various companies, which I can't even remember what they were, to be honest. I do remember Mr. Lube being part of it. The other 5 current interests are new to me, however, and for whatever reason, I sold out of it, probably because I wanted to try more riskier investments at the time. But I remember years ago never having any issues with it. It paid out as advertised on time, and the share price remained stable the entire time I held it to. I recently got back in because of the cheap share price and the fact that you get 8.5% annual return on any investment you make in them. 8.5% annual return puts it on my leaderboard as far as monthly Canadian dividend payers are concerned. So there you go. Consider Div. Perhaps if you just want to dip your big toe into the monthly dividend market, you don't need a lot of cash to buy these shares. If you're a rookie investor, you'll see what it's like to collect money from stocks without having to save up wads of cash first. Yes, it's pennies to start, but it's a start, and you'll quickly find that pennies turn into dollars if you give DIV time. And you can look at it this way. Whenever you buy monthly dividend payers like Div, you're giving yourself a monthly raise. Who wouldn't do this if they could? Even if it's $1 or 50 cents or whatever, as long as you hold the shares, you make more money than you did before. Only sell or cash out Div if it cuts its distribution or if the market value of your holdings in it swells way above what you paid for it, its book value. So I say check it out. Also, beginning next month, sometime I plan on trading commodity ETFs with a separate 5K account. So it'll be like a 5K challenge for me. I'll document it on here too. So hopefully I can demonstrate what trading the commodities markets is like also, and perhaps you'll find it more interesting since it's way riskier, yet it might yield far greater rewards. So stay tuned and find out. I don't even know how well I'll do with it. I just know I've had mixed results in the past, very mixed. So in the meantime, keep stacking those dividends, and thanks for watching, and stay tuned for more content coming soon.